Hello. Very, very good morning, everyone. How are you all? Everyone fine? Super? Okay. Now, last class, we completed India's 37. Then we started India's 10. Any doubt in any questions? If you have done any questions, have you tried any questions by your own? Whatever you have tried, in that any doubt? No doubt. Okay. Now, let us complete India's 10. There are some points left. I said that there are some special points. Special point regarding what? Adjusting or non-adjusting, whether it will be adjusting event or non-adjusting event. Okay. First is long-term borrowing. However, out of that is three special point. Two was already given in AS4. This long-term borrowing is a new point. The point about long-term borrowing was not in AS4. Now, what this point says? Suppose you have taken a long-term borrowing, a bank loan. You have taken a bank loan of 5 years. It become a long-term borrowing. It become a long-term borrowing. Now, as per the terms and condition of the bank, if you have done some default, correct, then this loan will become loan repayable on demand. This loan will become loan repayable on demand, and the loan repayable on demand will be current liability. Correct? Means if there is a long-term borrowing, initially it was classified as what? Non-current liability. Initially it was classified as a non-current liability. Now, if there is any breach of contract, then this loan will be classified as current liability. That is loan repayable on demand. Now, why it will become current liability? That is as per definition of current liability. So, where will do the definition of current liability? We'll do the definition of current asset and current liability in Ind AS 1. Right now, you need to only understand it that if it become repayable on demand, it will be classified as current liability. Now, what actually happened? This is 31st March, and on or before 31st March, there was a breach of contract. There was a breach of contract, and with this effect, what happened? The loan become what? Bolo? Loan become payable, yeah, repayable on demand. It become repayable on demand. If it become repayable on demand, then now it will be classified as what? Current liability. This much you understood? Correct. So this is the past event arising on what? 31st March. Means this is current liability on 31st March. Okay. So this will be classified as current liability on 31st March. Now what happened? Before approval of financial statement, bank agreed. Means of course some negotiation has been done with the bank. Entity has done some negotiation with the bank, and the bank agreed. Bank agreed not to demand payment. Not to demand payment. Understood? Not to demand payment. Means they will not demand payment. Now the question is that if after reporting date and if before approval of financial statement bank agrees not to demand, then whether it will be an adjusting event or non-adjusting event. If you are saying it is an adjusting event, then on 31st March it will be classified as non-current liability. If you are saying non-adjusting event, then on 31st March it will be classified as current liability. Understood? Correct. Batao. Adjusting, non-adjusting from your point of view. Apply your common sense. Have you understood the entire situation? Arey bolna rahi. Have you understood the entire situation or not? This is special point number 1. This is special case number 1. Batao. Adjusting, non-adjusting. Only you need to say adjusting, non-adjusting. Don't give explanation right now. But how many are saying adjusting? So if you are saying adjusting, how many are saying adjusting? How many are saying non-adjusting? How many are saying neither of these? This option will not come now. Correct. So this is actually what happened. As per Ind AS 10, it is adjusting event, and as per IAS 10, it is non-adjusting event. It is non-adjusting event, and this become your first carve out. You remember carve out? Remember carve out? This become your first carve out. This become your first carve out. Difference between Ind AS and IFRS. Correct? First carve out, and this different accounting treatment is for, as per the current economic condition of India, prevailing in India. So as per Ind AS 10, it is adjusting event. Of course, from examination point of view, what will be your answer? Adjusting or non-adjusting? Adjusting. So from exam point of view, you need to apply this only. Correct? Don't apply IAS 10 till they ask in exam the answer as per IAS 10, but they will never ask. The question is silent. It means it is as per Ind AS 10. Okay. So in exam, you need to always apply Ind AS 10 adjusting event. If it is an adjusting event, then on 31st March, it will be classified as what? Current or non-current? Non-current. So if it is an adjusting event, on 31st March, liability, borrowing, you can say liability, will be classified as non-current liability. Understood? Have you understood? Correct. Now, of course, one doubt will come, so why as per IAS 10 it is non-adjusting event? Just try to understand. Already I have said that IFRS is actually from the point of view of developed countries, means that has been drafted from the point of developed countries. Now in the developed countries, the banks are really strict. It is very much strict, and if any default happen, normally there is a rare situation, negotiation will happen. Correct. So as per the condition prevailing in the developed countries, it is very rare situation that bank will agree. Correct now. It is very rare situation, and can you say on 31st March there was no condition of waiver? There was no condition of waiver. I hope you are understanding. And it is very rare situation that they will waive. They will agree not to demand payment. So as per the economic condition prevailing in developed country, they said it is non-adjusting event on 31st March. Sorry, they say it is a non-adjusting event, and on 31st March it will be classified as current liability only. But in India, banks are not so much strict. Bank are not so much strict. They are strict, but not so much strict. Correct now. So bank may agree, means bank are always agreed to do negotiation. Bank are always ready to do negotiation. So it is common in India that if there is some breach, that can be waived off. And bank may agree not to demand payment. So in this case, if bank has agreed, and bank has agreed before approval of financial statement, it is understood. Now they will never demand. If they will never demand, why to disclose as what? Current liability. It should be disclosed as what? Non-current liability. Understood? The reason you understood for the carve out? Yes, sir. The reason is not important, but as per chartered accountant, it is important to know why the difference is there. Okay, sir? Yes, sir? Yes, sir. Now let us read. You will be able to understand. Whenever there is a breach of material provision, this I have not said. Means this para is applicable only there is a breach of material provision. Means if there is a minor default, then this para is not applicable. If there is a minor default, this para is not applicable. Means can I say in India, if there is a minor default, the bank will never classify a long-term borrowing as loan repayable on demand. For example, minor default means submission of PAN card, submission of some small document. So whether bank will say no, the long-term borrowing will become what? Loan repayable on demand. It is not possible in India. So this point is applicable only when there is a breach of material terms and conditions. Got this point? So material provision in case of long-term borrowing on or before reporting date means breach happened when? Breach happened before reporting date, before, on or before reporting date, with the effect that such loan become payable on demand, that is current liability as on reporting date. So what is the effect of this breach? That loan become what? Repayable on demand. The agreement by the lender before approval of financial statement for issue to not demand payment as a consequences of breach. And what is agreed before approval of financial statement? That they will not demand payment as a consequence of the breach shall be considered as an adjusting event. In other words, such loans shall be classified as non-current liability. Understood? Have you understood? Now to understand, as per flow chart, breach of contract of long-term borrowing on or before reporting date. If there is a minor default, ignore it. Ignore it means, can I say it will not become loan repayable on demand? Means, can I say if there is a minor default, still the loan is what? Non-current liability. This para is not applicable only. So if there is a major default, if the lender agree not to demand before approval of financial statement, then it will be non-current liability. In other cases, means if bank has not agreed, in other cases, can I say it will be still classified as what? Current liability. Got this fine? Correct. What is the carve out? As per IS 10, you can see as per IS 10, rectification of any breach after the end of reporting period is a non-adjusting event. Means any breach, whether it is material or immaterial. So IS 10 has not given the term material, immaterial. They say any breach. Rectification of any breach after reporting date will be always considered as what? Non-adjusting event as per International Accounting Standard 10. Okay, sir. Simple. Can we proceed? Special point number 1 you understood. This is very, very important. Can be asked in exam. This point again will do. Let us refer Ind AS 1. Refer Ind AS 1. Again we'll discuss this point where it is related to current liability, non-current liability, and the definition of current liability and non-current liability will do under Ind AS 1. So again this point I will discuss under Ind AS 1. Chalega. Let us refer Ind AS 1 again. Means whenever you are in this point, you can go to Ind AS 1 and just check what is given under Ind AS 1. Okay, sir? Yes, sir. Now, second special point is about going concern. Going concern, what Ind AS 10 says, just try to understand. Point number 2, special point number 2, we are doing going concern. Suppose this is reporting date and this is the date of approval, and fire occurred. Fire occurred in the premises, in the business premises of the entity. Correct? So fire occurred, there will be use loss. Use loss. But it is adjusting event, non-adjusting event. Adjusting event, non-adjusting event. Yeah. So very good. It means you remember AS4, what they said, if going concern GC, if GC remain valid, if going concern remain valid, means even though there is use loss, it does not mean going concern will be affected. It is quite possible the loss is covered by insurance company, or it is a profit rich company. Even though use loss happen, they might recover it. Okay now. So if the GC remain valid, then it will be a non-adjusting event, because there was no condition of fire na. It is a non-adjusting event. Then only disclosure required. But if GC going concern become invalid due to such event, then what our Ind AS 10 says that this should be informed to the user of financial statement. Correct? Because now your entity become non-going concern. If your entity become non-going concern, then the financial statement should be prepared as per non-going concern basis. Means whenever we apply Ind AS, the Ind AS is applied in the situation when entity is a going concern. Correct? It means, can I say, now your accounting, for your accounting or for your preparation of financial statement, you need to change the fundamental basis of accounting. You need to change the fundamental basis of accounting. Correct? It means now it will be redrafted on non-going concern basis. It will be redrafted on non-going concern basis. So of course it will be considered as adjusting event, and financial statement will be prepared by a fundamental change in the basis of accounting. Fundamental change in the basis of accounting. Now, what's with the basis of accounting that is not given under Ind AS 10? Means on what basis financial statements should be prepared, that is not given under Ind AS 10. However, Ind AS will never be applicable when the entity become non-going concern. Once the entity become non-going concern, the no Ind AS will be applicable. So Ind AS is totally silent in this case. It means, can I say, we need to apply generally as acceptable accounting practice for this purpose. Correct? Or this one, chapter number 1 is for conceptual framework that I will do at the end. So you need to prepare a financial statement by applying conceptual framework for the preparation of financial statement. Correct? Got this point what I am saying? So as per that, your financial statement will be now prepared on non-going concern basis. That is, we can say in this way, that is, all assets and liabilities are recognized at realizable value. All assets and liabilities are recognized at realizable value. This is not given under Ind AS 10. So don't write as per Ind AS 10, assets and liability are recognized at realizable value. This I have given as per generally acceptable accounting practice. Understood? Have you understood? So in our Ind AS 10, only this para has been given. Only this para has been given. You change the fundamental basis of accounting. You change the fundamental basis of accounting, and therefore it become an adjusting event. Correct? It means whenever this type of questions come, where the going concern is affected or not affected, and if the question is silent, whether GC is affected or not affected, you need to give both alternative solutions. Both alternative solutions. If the question is silent, because it is quite possible fire occurred and they have said use loss incurred, but a question is silent about the GC, going concern, then apply both assumption and give your alternative answer. Understood this fine? Have you understood this fine? Simple. Correct. So right now financial statement, we are discussing about financial statement of which year? Means if suppose this is 23-24 and this is 24-25, so you will prepare your financial statement on non-going concern basis for which year? For this year. We are discussing about this year. Even though in this year entity was going concern. Even though in this year entity was going concern. Understood? Have you understood? Simple. Yes, sir. What is given? Let us read. An entity shall not prepare financial statement as per going concern if. Correct. So entities shall not prepare their financial statement on GC if they intend to liquidate. Means there is an intention to liquidate. Till now not liquidated. There is an intention to liquidate. Correct. Intention to liquidate. There is an intention to cease trading. They want to what? Stop trading, cease trading, or it has no realistic alternative but to liquidate. Means they do not have any other option. They have only one option to liquidate, even though they have no intention to liquidate. For example, government has put restriction on plastic industry. If there is a restriction on plastic industry, even though that is industry is a profit making, we do not have an option. We have only one option to liquidate. So in any case, in all these cases, financial statement will now be prepared on non-going concern basis, not as per going concern basis. Okay, sir? Correct. So if going concern assumption is not appropriate, that is become invalid after reporting date, Ind AS 10 require a fundamental change in the basis of accounting rather than adjustment to financial statement. However, if you read AS4, AS4 says we need to make adjustment to financial statement. Only this wording has been given. But our Ind AS 10 says that we need to prepare our financial statement by fundamental change in the basis of accounting. Fundamental change in the basis of accounting means we need to change the basis of accounting. Correct? There is nothing but all assets and liabilities are recognized at realizable value. Understood? Yes, sir. Now, if you are preparing any financial statement on non-going concern basis, if you are preparing any financial statement on non-going concern basis, Ind AS 1 says, not Ind AS 10, Ind AS 1 says that following disclosures are required. Which Ind AS? Ind AS 1 says following disclosures are required. So as per Ind AS 1, Ind AS 1 require following disclosure if the financial statement are not prepared on no going concern. First, fact that you are preparing your financial statement on non-going concern basis, this fact must be mentioned. Second, basis of preparing financial statement, what basis you have taken for preparation of financial statement, that should be mentioned, and reason why entity is not regarded as a going concern. What actually happened that now entity is not regarded as a going concern, that need to be disclosed. So fact need to be disclosed, the basis of preparing financial statement need to be disclosed, and the reason why entity is not regarded as going concern need to be disclosed. But this disclosure is not as per Ind AS 10, it is as per Ind AS 1. Okay, sir. Ind AS 1 is for the presentation of financial statement. We'll come to that Ind AS 1 soon. Correct. It means what two situations may come in exam if even after reporting date, if going concern remain valid, then become non-adjusting event. Disclosure is required if the amount is material. Only disclosure required. But if the going concern is not valid, adjusting event and fundamental changes in the basis of accounting is required. Disclosure required as per the requirement of Ind AS 1. Chalega. And so there are some questions given, you can read by your own. Okay, sir? Yes, sir. Then last point is proposed dividend. What is the meaning of proposed dividend? What is the meaning of proposed dividend? Proposed dividend means what? Dividend which is proposed by the board of directors and approved by shareholders in annual general meeting. So it become approved by shareholders. Now liability will arise on proposal or on approval. Obligation to pay means company's obligation to pay will arise when it is proposed by the directors or when it is approved by the shareholders. Obligation to pay will arise when it is proposed by board of directors or when it is approved by the shareholders in annual general meeting. Approved, when it is approved means, can I say whenever it is proposed, proposed means proposed. Correct now? Have you proposed anyone? You will sometime propose, you will understand it is not finalized. It is not finalized. So can I say whenever I am saying the directors have proposed, it is only a proposal, but there is no obligation arises. So you only say if before approval of financial statement, board of directors meeting propose a rate of equity dividend, whether there is any obligation to pay. If there is no obligation to pay, there is no liability. So should we recognize liability on balance sheet date? No. And therefore it become a non-adjusting event. Non-adjusting event means, can I say in this way, any dividend declared after reporting date will not be recognized as a liability on reporting date. Any dividend declared after reporting date, even though it is for this current year. Correct. So what they say, if any entity declare dividend to the holder of equity instrument. Now the word is what? Equity instrument. It is not equity shares. Equity instrument. So equity instrument is a wider term. Equity instrument is a wider term. Equity share is an example of what? Equity instrument. Means, of course, now you'll ask me some other example. Detailed discussion we'll do in one chapter. That chapter is coming soon in Ind-AS 2. The meaning of equity instrument will do under Ind-AS 32, not right now. Ind-AS 32, the meaning. Okay. Are you able to understand what I am saying? Correct. So, if an entity declare dividend to the holder of equity instrument, sir, can you give me some other example? Other example, one the best example I am saying, irredeemable preference shares. So, irredeemable preference shares is also an example of equity instrument. Correct? Is also an example of equity instrument. But detailed discussion. Sometimes irredeemable preference shares may have some more features. Correct? So, I am saying there is some condition, there is some star mark. Detailed discussion will do where? In Ind-AS 32. Equity share is one of the perfect example of equity instrument. Yes, sir. Yes, sir. If any entity declare dividend to the holder of equity instrument after reporting date, the entity shall not recognize it as a liability at the end of reporting period. At the end of reporting period. However, such dividends are disclosed in the notes to account, but as per the requirement of Ind-AS 1. So that proposed dividend need to be disclosed in the notes to account of the financial statement as per the requirement of Ind-AS 1. As per the requirement of Ind-AS 1. Simple. Now my question to you all, when we are disclosing in the notes to account, whether it will be disclosed as a contingent liability or it will be disclosed, means whether it become a contingent liability. My question you have understood. We are disclosing in the notes to account whether it is a contingent liability. Why it is not a contingent liability? If you are creating a provision, then it is a liability. I am saying it will not be recognized as a liability, means it is not a provision also. You are not able to understand. Liability provisions are liability. When you are saying it will not be recognized liability, so whether it is a provision, if there is no obligation, so there is no present obligation. Abhi we have done Ind-AS 37. Why I have done Ind-AS 37 before this? Because of this point only. My entire discussion is interlinked. So now I apply Ind-AS 37 now. When I am asking about contingent liability, so don't give answer based on your thinking. Now you need to give answer as per what? Ind-AS 37. Contingent liability already we have done or not? So what I am asking, this proposed dividend will be disclosed in notes to account as contingent liability. Yes or no? Yes or no? Means you are not able to apply the definition whatever we have done. Are you getting? Already we have done before what? Ind-AS 10, Ind-AS 37. Apply definition now. Whether there is any present obligation arising from past event. And there is no obligation. I have already said there is any obligation on balance sheet date. So why you are not reacting? You want me to answer? So I will stop asking questions. You want me to answer? Then morning, please. I said answer even though you don't know. Participate. Till you think, means till whether if you do not have the will to answer, you will not think. If you will not think, how it will process in your mind? So first there should be intention to answer. Then only you will think. Okay, 1 second. I am saying whether it will be disclosed a contingent liability. Contingent liability are present obligation arising from past event which is not recognized, either outflow of resources is probable or reliable estimation cannot be made. So there is no present obligation. Second, it can be possible obligation. Whether there is any possible obligation? Whether there is any possible obligation? Yes or no? I am asking whether there is any possible obligation. How? I say no obligation. You are saying it is a possible obligation. Nalayak, already I have said there is no obligation. Already I started with proposal. There is no obligation. Obligation will arise only on approval of the dividend by shareholders. Already I have given the answer. There is no obligation. How it can be present? How it can be possible obligation? Are you able to understand? Do you want me to give answer? Or do you want to apply by your own? So already hint I have given, there is no obligation. Hint already I have given. Then also you are not able to apply. Just try to understand what will happen in exam hall. You need to react. You need to change yourself. Start giving answer by your own. Even the wrong chalega, but react. Reaction is required. Reaction is required. With every question, you need to react. Whether it is positive, negative, that will be decided on exam hall. But start reacting. Okay. So can you say note proposed dividend is not a liability, huh? And it is not a contingent liability also. Okay, sir. It is not a contingent liability. Understood? Understood. Correct. Means what actually happened? This is your reporting date. This is your date of approval. And this is the AGM. And this is the year end, second year end. Reporting date. Okay. Okay, sir. Now, for this financial year, they will propose equity dividend यहाँ पर. Suppose they have proposed dividend of rupees 1 lakh. Understood? And this will be finalized on which date? This will be approved on which date? AGM na. So on AGM it becomes final dividend. We call it what? Final dividend. We call it final dividend. Understood? Correct. But on reporting date, what journal entry will do? On reporting date, what journal entry will do for this proposed dividend? On reporting date, what journal entry will do? On reporting date, any journal entry? So bolo na no journal entry. If I am asking any journal entry, why you are silent? Already I have said it will not be recognized as a liability on reporting date. Are you able to understand my English or not? I should start teaching you Sanskrit. I know Sanskrit also. So better English is okay na? You all have come from China and I don't know Chinese. Are you able to follow me or not? Today morning sleep is not okay. You are still sleeping. Batao. No journal entry. Now on the date when it is proposed, what journal entry? No journal entry. Bolo na no journal entry. You want me to answer? No journal entry because no obligation. Because obligation arise where? On this date. Now it become your liability. So you will pass what journal entry? Batao. Do you know about journal entry of dividend? In bachpan mein you have done CA inter. What is journal entry? Forgotten. You have done PL appropriation account. You know PL appropriation account? PL appropriation, PL account, PL appropriation account. Now PL appropriation account is known as retained earning. Means this will not be transferred to PL account. It will be adjusted with retained earning directly because it is not an expense. It is not an expense. So directly we will do retained earning account debit to equity dividend payable. And can you say, as per Companies Act, it need to be paid within 30 days of declaration. It means, can you say, it will be paid within year only, within this year only? Correct. So on payment, what journal entry will do? Equity dividend payable account debit to bank. Correct. But is the dividend of which year? Previous year, current year, previous. So this is the dividend of previous year, but recorded in which year? Current year. Recorded in current year. Recorded in current year. Understood? This is the final dividend. Do you know what interim dividend? Interim dividend. So interim dividend declared and approved by board of directors in their meeting, and that is declared between two AGM. So interim dividend of current year will be declared and paid in current year only. Therefore, same journal entry will be done, but can I say in that year only? Same journal entry remains same, but in the year in which it declared only. So it will, for current year, it is declared and paid in current year, but final dividend of previous year will be declared and paid in current year. This is the difference between final dividend and interim dividend. Understood? Have you understood? Now, just try to understand. Correct? If I am saying shares, so there are two type of shares. One is equity, one is preference. Now, equity shares will be always classified as what? Always classified as equity, means equity instrument. Okay, in this too, no doubt. Correct? But these preference shares are of two types. It can be classified as equity. For example, irredeemable preference share. Detailed discussion will do when it will be classified as equity, when it will be classified as liability. We'll discuss in India 32. Coming soon. But if you remember the definition of liability, I started with the liability definition in India 37. I said, you only said actually, redeemable preference share capital is a liability or equity. Redeemable preference share capital is a liability or equity. Liability, because there is an obligation to pay outflow resource there. So therefore, it may be classified as what? Classified as liability. Understood? So this equity dividend is covered under Ind AS 10. Understood? This preference dividend is also covered under Ind AS 10. Understood? But this liability, because if there is any liability, it is as simple as borrowing. It is as simple as borrowing. So whatever you are paying for the borrowing, it is actually in substance interest expense, and interest expense will be charged to PL or retained earning. PL, and therefore it is not covered under Ind AS 10. It is not covered under Ind AS 10. Understood? So here write down. It is not covered under Ind AS 10. I hope you are understanding. अभी तो starting, we are at initial stage. धीरे 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 understanding will come. Are you able to understand? So this preference dividend, just write down this point, will be recognized as an expense and calculated by applying effective rate of interest as per Ind AS 109 coming soon. As per Ind AS 109. Just write down and leave it. Don't think much. Write down and leave it. Okay? Because right now I will not explain and you will not understand. But can I say when you will do revision, that time Ind AS 109 is completed, you can link it. So this entire para you will be able to understand when I will complete one chapter, financial instrument chapter. But write down and leave it, even though you have not understood. But one thing is you have understood that this para is applicable to the holder of equity instrument. To the holder of equity instrument. Okay, sir. Okay, sir. Chapter over. Ind AS 10 is over. But there is one appendix. You can see appendix. That appendix will do. Appendix A to Ind AS 10. But before that, let us complete disclosure requirement. Disclosure requirement is very easy. First, we should disclose the date of approval of financial statement. When the approval has been given. Who has given approval? The name of the director who has given the approval, that is also required. An entity's owner or other who has the power to amend financial statement after issue. I said now, if you remember that we can reopen the books of account and some special power is given to the entity's owner or any other person. So if that power has been given, we need to also disclose that. Yes, sir. This disclosure was not required under AS4. AS4 was silent about point number A. Okay, sir. Then updating disclosure about condition, existing or reporting date for existing event. Updating disclosure about condition, existing or reporting date for existing event. Let me ask you one question. Suppose if I say this is 31st March and this is the date of approval. Understood? Correct. And there was a possible obligation. There was a possible obligation. So it become contingent liability. Correct. Now, as per the information available on 31st March, you have major contingent liability at rupees 10 lakh. At rupees 10 lakh. Correct. Now, some event occur यहाँ पर. Some event occur before approval of financial statement, and because of that event, the measurement change. Now, from 10 lakh, it become 12 lakh. From 10 lakh, it become 12 lakh. Quite possible. Now, as per this information, whatever available before approval of financial statement, contingent liability should be measured not at 10 lakh, it should be measured at 12 lakh. Quite possible. Now, बताओ, it is adjusting event, non-adjusting event. Adjusting event. It is an adjusting event now. So, बताओ, what adjustment entry you will do? It is an adjusting event now. So, what adjustment entry you will do? Nalayak contingent liability will not be recognized. There is no journal entry. Why you are giving journal entry? Dekho, once again, no concentration. You have already done contingent liability. For contingent liability, will you pass any journal entry? So why you are saying journal entry? If I am asking journal entry, will you give me journal entry? Once again, I am going to kill you, by asking a lot of questions. I know whenever I will ask you to give answer. In exam, same thing happen. They are asking something, you are answering something. First of full high level of concentration required in my class. थोड़ा इधर उधर खत्म. So I will teach you how to concentrate in 3 hours, and your exam is also 3 hours. Correct? Correct. So for contingent liability, we don't pass any journal entry. Only can you say one adjustment is required in disclosure. Means you need to only update what? Only to update what? Bolo? Update disclosure. Disclosures na? Update disclosures. This is also adjusting event, but you can't say it is a non-adjusting event. It is an adjusting event. Correct? Now you will be able to understand this particular point. Updating disclosure about condition, existing or reporting date for existing event. Means if you are doing some updation on disclosure for existing event, that is also what existing event only now. So that point number B says. Understood point number B now? Point number C, non-existing event if material, if the amount is material, following disclosures are required, nature of the event and an estimate of its financial effect. If you can estimate, if you can't estimate, facts should be disclosed. That we are not able to estimate, we are nalayak. Okay sir, chalega, disclosure requirement. Then let us do differences between Ind AS 10 and AS 4. However, it is not a part of syllabus. You can cut it if you want to cut. Give one cross. Before exam, don't take so much pressure to memorize this. Just before exam. Before interview, you can read it. Correct? So what they are saying, non-existing event, our Ind AS 10 disclosure in financial statement, but what AS 4 says, disclosure in the report of approving authority. First difference. Second difference is going concern. Our Ind AS 10 says that we should make a fundamental change in the basis of accounting if going concern become invalid. However, AS 4 used to say only require adjustment to assets and liability. They have not used this term fundamental changes in the basis of accounting. However, practically, means this become a theoretical difference. Practically, there was no difference. Because as per AS 4 also we used to make fundamental changes in the basis of accounting by recognizing all assets and liability at a realizable value. Correct. Disclosure more and less. This point will a point of difference in each Ind AS. Because in under Ind AS we have more disclosure as compared to AS. Okay, sir. Done. Chalega. Now there is one appendix, appendix A to Ind AS 10. You remember I have explained what is the appendix. I have said internationally there are some interpretation committee. Before 2001 there was SIC. After 2001 it became IFRIC. They give some interpretation for new development or for new type of some new development came in the transaction, etc. So some more interpretation required. It is quite possible IFRS may be silent for a particular transaction event. So for that some interpretation is given. That interpretation will now become what? Appendix. Correct. So appendix has been added to respective Ind AS. Understood. So in this we have which appendix? Appendix A to Ind AS 10. What is the title? Title is distribution of non-cash asset to the owner, that is a holder of equity instrument. Now whenever I say dividend, dividend means cash dividend. Means this point whatever we have done right now, this was for cash dividend. Now they are saying there is a distribution of non-cash asset to the owner. Means instead of cash, the dividend has been given in kind. Quite possible. Then what will be the accounting treatment? What will be the accounting treatment? This we are discussing in this particular appendix. Now whenever the question will come from this particular para, this particular topic, and if you write as per Ind AS 10, that is wrong. Means you should write on as per appendix A to Ind AS 10. Means Ind AS 10 is different, appendix A to Ind AS 10 is different. So you can't say as per Ind AS 10, it is as per appendix A to Ind AS 10. What is the topic? Distribution of non-cash asset to the owner. Means let me explain what is actually the topic. So we are doing appendix A to Ind AS 10. Appendix A to Ind AS 10. Now there is no question given in what? ICI study matter here. There is no question. Correct? But from these, one of the question has been given in multiple choice question of ICI. That multiple choice question they have given in their board of studies portal. It means can I say multiple choice question can be asked from any topic, and due to MCQs all topics, means all small topics, or I will say the topic from which descriptive questions are not given, become important. Now whether question will come or will not come in your exam, I don't know. but it is a part of syllabus. I teach. Yes, yes, sir. So first, what they want to say, let me explain. Is if this is the entity, so this become owner. Owner means what? Shareholders. And basically, this is nothing but holder of equity instrument. But right now, think it is a equity shareholders. Means whenever I am saying owner, it can be any holder of equity instrument. It can be any holder of equity instrument. All are owner. But best example is what? Equity shareholders. So let right now think about equity shareholder only. Okay, sir. Now, what are the different types of transactions between entity owner? Can you give me some transaction between entity owner? First transaction is what? Contribution from owner. Contribution from owner. Understood? Contribution from owner. Correct? Simple. Second will be distribution to owner. Second will be a distribution to owner. These are the two basic transactions. Na? So when I am saying contribution from owner, it can be in cash, it can be in non-cash. बोलना रे. Similarly, if I am saying distribution to owner, it can be also in what? Cash or non-cash. Any other transaction? Then can you say there can be some other transaction? For example, purchase from owner, sale to owner. Shareholders, entity may do some transaction with their respective owner or not. They can be loan transaction, loan given, loan taken, whatever. Correct. So there can be some other transactions also. Other transactions also. Now, if I am saying other transaction, suppose sale of goods, for example, sale of goods. So if I am saying sale of goods, the cash will be received by the entity and goods will be transferred to the owner. It is two-way. It is two-way. Therefore, two arrow. But when I am saying contribution from owner, only cash received. But there is no obligation to pay now. There is no obligation to transfer anything. Yes or no? When I am saying distribution to owner, so only cash is given. Nothing is received. No service, nothing has been received now. It is one way. It is one way. I hope you are understanding. Now, this type of transaction is known as reciprocal transactions. So, these two transactions will be known as what? Bolo? Non-reciprocal. Non-reciprocal transactions. Okay, sir. Correct. Now, this transaction will be covered in respective Ind AS. This type of transaction, this is only one example, sale of goods. Huh? This type of transaction will be covered in respective Ind AS. Means sale of goods. So, from entity's point of view, sale to Ind AS 115. From owner point of view, purchase, if that is also an entity, then Ind AS applicable. Suppose the purchase, if they purchase inventory, Ind AS 2 will be applicable. If they purchase PP, then Ind AS 16 will be applicable. Correct. The respective Ind AS. It means it is outside the scope of this particular topic. Understood? Correct. Now, contribution from owner, if it is in cash, it will be covered under Ind AS 32. Coming soon. Coming soon. Yes or no? And if it is in non-cash, then this is actually Ind AS 102 coming soon in your life. Means suppose entity receives some property, plant and equipment, yeah, receive some goods or receive some services and equity shares issued. So contribution in the form of goods or services, then Ind AS 102 will be applicable. Discuss करेंगे. I am just writing. This is not a part of this topic. Whatever we are discussing, this will be discussed in some other Ind AS. Now distribution to owner in cash, it is covered under Ind AS 32 coming soon. Once again, so this we are also not discussing in cash. I mean, right now we have done one journal entry, return earning account debit to dividend payable. This has been given under Ind AS 32. Any distribution to the equity instrument holder will be transferred retain earning. Journal entry. Abhi here to we have done whether adjusting or non-adjusting na. Means abhi right now this point I have given this journal entry na. This journal entry I have given. So here in this Ind AS 10 we have already discussed whether adjusting or non-adjusting. Means whether when to recognize the journal entry. But the journal entry, this journal entry is as per the requirement of Ind AS 32. Chalega? Yes, sir. Now, what actually happened before this Appendix A to Ind AS 10, means before this particular interpretation, there was no accounting treatment for this. So there was a doubt. If there is a distribution of non-cash asset to the owner, what will be the accounting treatment? Means if you distributed non-cash asset, so at what value that journal entry will be done? One doubt came. However, from my point of view, this appendix should not be added to Ind AS 10 because Ind AS 10 deals with adjusting, non-adjusting, not for the accounting treatment. From my point of view, this should be attached to Ind AS 32 only. But because the proposed dividend wala point was given here by mistake, they have attached here. From my point of view, there is nothing adjusting. There is nothing adjusting, non-adjusting event in this particular point. We are not discussing adjusting, non-adjusting. We are discussing the accounting treatment of distribution of non-cash asset to the owner. But Ind AS 10 deals with adjusting, non-adjusting event. Are you getting what I am saying? But now they have given this particular accounting treatment where? In Appendix A to Ind AS 10. So we'll discuss here only. We'll discuss yahan par. Understood? Correct. Have you understood? Now what I will do, I will not say what is the accounting treatment. I'll create one scenario. You'll say me what will be the journal entry. Understood? One thing already you have understood that if distribution of cash means dividend, then journal entry is retain earning account debit to dividend payable. Means always dividend is debited to what? Retain earning. Dividend will never be debited to PL account. Dividend will be always debited to retained earning. Understood? Have you understood this fine? Are you able to follow? Now can I create one example? Example already I have created. So let us directly come to example. Example is given in your Saaransh book only. Correct? Entity proposed distribution of one pen to all shareholders on 15 Jan 2017. Okay. So what is the proposal date? 15 Jan. Entity declared and approved a dividend for distribution of one pen to all shareholders on 15 Feb. So when it was approved on 15 Feb, it was actually distributed on AGM which was held on 15 5. Actually distributed on AGM means whoever was coming in the annual general meeting, one pen was given as a gift. That is nothing but distribution, na? Correct? Fair value of each pen on 15 Jan 2017 was 500. Means on the date of proposal it was 500. On 15 Feb 2017 it was again 500. So on the date of approval, it was 500. On 31st March, means between two dates, approval date and distribution date, there is one reporting date also. So on 31st March, it becomes 520. On 15 May, means on the date of distribution, it becomes 515. And the cost price of each pen, let us assume this pen is inventory. Let us assume it is inventory for the entity. Let us assume. Okay, I have assumed. So cost price of each pen is what? 400. Correct. Number of shareholders is 1000. What is the total number of shareholders? 1000. Give accounting treatment. So you are not supposed to read the solution. Correct. You are not supposed to read the solution. Batao. I will ask you, you will give me journal entry. Okay. So we are doing example. But what journal entry you will do on 15 Jan 2017, means on the date of proposal. On the date of proposal, what journal entry? Bolo? No journal entry. Very good. No journal entry na? Because on the date of proposal, there is no obligation to distribute. Only it is a proposal. Therefore, no journal entry. Okay, sir. Means this example I have done. This already I have given this illustration na. So I want now answer from your side. Okay. But on the date of approval, what is the date? On 15 Feb 2017, what is the date? Approval. This is date of approval. Now what journal entry? Bolo? Journal entry. First journal entry. Then amount. Retained earning account debit to? Yes, correct. Retained earning. Low. Retained earning account debit to dividend payable. There is an obligation to distribute. That is also what? Dividend payable. Means, of course, the liability can be settled in some goods also by transfer of goods. That is also outflow of resource. Outflow of resource. So that is dividend payable. Correct. But what amount? What amount? Means it will be recognized. I am giving you two options: at cost price of pen or fair value of pen. At cost price of pen or fair value of pen. I hope you have understood cost price and fair value are two different terms. Fair value means what is the current price. I will define fair value in some other Indians, don't worry. Okay. But you have understood these are two different terms. At cost price or fair value from your point of view. At cost price or fair value. जिंदाबाद कुछ भी बोल दो. So it will be recognized at fair value. It will be recognized at fair value. Correct? It will recognize at fair value, not at cost price. So it will be 1000 shareholders. Can you see each shareholders? They are giving one pen, so into 1, and what is the fair value? 500. It will become how much? 5 lakh. It becomes 5 lakh. It becomes 5 lakh. Understood? Now you must be thinking, so why at fair value should be at cost price? Just try to understand. If suppose this pen was not distributed, then it would have been sold. So it have been sold at what price? 500 only. Then that much cash would have been received, and that cash would be distributed. So instead of pen, if you would have given cash, that would be worth rupees what? 5 lakh only. Yes or no? That will be worth rupees 5 lakh. Therefore at fair value. Therefore at fair value. Understood? Now what happened on 31st March 2017? The fair value of this pen changes from 500 to 520. Any adjustment required? Not required? Yes. Here is you need to recognize liability at current fair value. You need to adjust the amount of liability. So what you will do? Your retained earning will be again debited. Retained earning account debit to dividend payable and you will increase your liability by what amount? 1000 into 1 into what? 20, that is 20,000. That is 20,000. Look, understood. Then what happened? Actual date of distribution came 15 May 2017. Now again the fair value become how much? 515. Once again reassessment is required. So now you will decrease your liability. So what journal entry you will do? You will say dividend payable account debit to what? To retained earning. To retained earning, and this will be 1000 into 1 into what? 5, that is 5000. Now your liability become how much? 5,15,000. Now we'll do distribution journal entry. So what will be the distribution journal entry? You will say what you have distributed. Pen. So pen will decrease and your liability will also decrease. What journal entry? Dividend payable account debit. Can you say 5,15,000 and 2 pen, or you can write down inventory. Can I say it will be de-recognized at its carrying amount? So of course it is carried at cost price. Cost price of each pen is what? 400. You do de-recognize at 400. So what will do? 1000 into 400. That is 4 lakh. 4 lakh. Understood? Have you understood? Now this difference should be transferred to PL or retained earning. Batao. The difference should be transferred to PL or retained earning. The difference should be transferred to PL or retained earning. What do you think? Now it means I need to explain something. But when I say SOPL, SOPL means what? SOPL means what? It is a statement of, I am drawing horizontally, but I also know, you also know, it is vertically. Okay? In SOPL, we write down in credit side what? Income. And in debit side, we write down what? Expense. Yes or no? What is the meaning of income and expense? What is the meaning of income and expense? Bolo. Income means what? Expense means what? Inflow. Every inflow is income. You receive loan from bank. That is also inflow. Now you are chartered accountant. Suppose somebody asks you what is the meaning of income. If you say inflow is income, they will say bye bye. Yes or no? Can you say small definition income, small definition expense? We are doing from the bachpan, when the day when you started accounts, from a day you are knowing income and expense, but nobody explained and nobody asked also. You have never asked to your faculty what is the meaning of income. Yes or no? I said in the class that I will do each and every definition from bottom to top. From bottom to top in this class only. But first you say what is the meaning of income. One thing is clear. Can I say any item which meet the definition of income and expense will be transferred to PL? Any item which meet the definition of income and expense will be transferred to PL. Yes or no? Correct? You will say or I will say? Means one thing is clear, that what we have done in CA Foundation, what we have done in CA Inter. In CA Inter there was one chapter, framework for preparation and presentation of financial statement. There was one chapter, theoretical chapter. No teacher teach, no student read. and that is one of the important chapter. In that chapter, all the definition of asset, liability, income, expense, equity has been given. And can I say we should know this definition? Yes or no? Because we are here to become chartered accountant. Chartered accountant means what? Highest knowledge of accounting, and we don't know the meaning of income and expense, and we expect that ICI should give us marks. We should expect. But can I say we should change right now? Yes or no? We should change right now. Once again, these are not important from exam point of view, but you only say important to become CA or not. Important to become CA or not. Yes. You know what I just want to say? Why CA become difficult? Why CA become difficult? You know, I said the only reason is our poor education system. Poor education system, and mostly in what? Class 11 and 12. In class 11, 12. Poor education system. In class 11, 12, no teacher teach conceptually. Every teacher teach from what? Exam point of view. This is this, this is this, do this. Now, you know, there are many CA, there are many CA students who came from science background and started doing CA. Anyone here from science background? You are from science background. Correct. Acha, normally CA means what? Commerce. But I have never seen any student who is from science background and has not become CA. But there are a lot of students from commerce background who have not become CA. I am also from commerce background. I am also from commerce background. But can I say, a science background student have not done 11, 12, have no knowledge about accounts, and there might be some other subject which they have not done. Then they started foundation. In foundation, they have studied for the first time. Then also they are giving good results. What actually happened to commerce student? Commerce student to have done 11, 12, they should score more in accounts. And I will say CA means what? Commerce only. So what actually reason? What is the reason? Reason is what? Poor education system in commerce, not in science. Normally what happened in science? I will just say, if you means you might be knowing, when there is a science class, science stream 11, 12, the teacher will come. Teacher will first explain theory. Am I right? Theoretical knowledge will be given. Full theory, detailed discussion about definition, everything will be diagram, everything presentation. And then if practical required, they will go to lab or they will go to outside the class for practical illustration or not. Means you have done that only. It means first theory, then illustration of that theory with practical exposure. Correct? And then they started linking that. Correct? Yes or no? Am I right or not? This is the, so they are actually habituated of studying theory. First theory, meaning, etc., 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 and then linking with the practical things. But our commerce, first day of accounts class, second day of accounts class, they will directly, means if suppose you are in the final account, they will say this is the format, this is the balance sheet, dekho bachcho, this is PL account, write down income here, write down expense here, write down asset here, write down liability here. They will give some examples of asset, they will give some example of liability, they will give the example of income, they will give the example of expense, and they will give trial balance, match, maja aa raha. No one will define what is asset, liability, income and expense. Most of the case that they will give format based studies we have done in accounts. Journal entry, to believe me, the rules okay you have done, but most of the students have done rectification of journal entry. It might be case with you. I will ask you some small question. You might, it is, I am 100% sure you might not be knowing. I am 100% sure. I just don't want to ask. Yes or no? Means this type of studies, believe me, I was also affected. In class 11, 12, I also scored 99 in accounts. But I know what we studied, what type of study we have done in class 11, 12. So marks is not important. Knowledge is important. Knowledge is important. Now we scored 99. We think we are what? Guru. We are Mahaguru. Then we came to CA. We understood where we are. So this is the reason why commerce students struggle in what? CA. Because they are habituated of not studying theory. They want what? Sir, journal entry, sir, ledger account, sir, balance sheet. Theory, sir, no. And we struggle in all theory paper. Audit is the most practical subject. Means this audit is our bread and butter. We will earn from audit only. Audit is our backbone. Without audit we can't survive. We will only become auditor. Who is auditor? Only chartered accountant in India. And then also we don't like audit. I have never understood this point. I have never understood. Student says, sir, audit I will fail. Arey by audit you will fail. Why you want to become CA? How can you become CA if you are saying I am weak in audit? After becoming CA, can you say the first job is audit only? And you are saying, sir, I am struggling in audit. Arey bhai, what is this? A CA means auditor, and you don't like audit? You don't like audit? क्या है ये? Can you say bakwas thing? You should like audit only because this is the area where you will earn money from this area. Am I right or not? So a CA student, CA final student is saying, I don't like audit. I don't, sir, only I want 40 marks in audit. Then Nalayak, you want to only pass CA examination. You don't want to survive in the market. Just try to understand what I am saying. This is the reason. Reason is what? We have never given importance to theory. From class 11, 12. Means I remember my days of class 12, my economics teacher used to come and she used to open her notes and she used to dictate, write down this, and we used to write down. Then she used to say question will come from this, memorize and come. We used to come with memorization without understanding. We got good marks because question will come from that only. Memorization, so we are highly skilled. We can memorize anything at that point of time. Yes or no? Arey bolna re. At the age of 6, we have memorized 20 table, 1 to 20. Yes or no? So we are good in memorization. We are very good in memorization. Yes or no? My child, my younger son is of 8 years. He knows table up to 20. No, memorization. Only memorization. Yes or no? The thing is that you are not here for memorization. Now, why income, why expense, why these items are income, why these examples are expense, why these are liability, why these are asset, we are here for that. I am just explaining right now because abhi 80 class are left. Change yourself. Change yourself. Am I right or not? Am I right? So CA become difficult because of our Indian poor education system in class 11, 12. In class 11, 12 commerce education it was good now. Believe me, CA is very easy, damn easy, because we are habituated of learning things conceptually. Student nowadays say, sir, teach only that much what will come in exam. Why are you teaching everything? Arey bhai, you want to become CA, you want to go to the Indian market and you want to say that I am chartered accountant. You should have highest knowledge na. I have never understood why you want to learn only that thing which will come in exam. Why you don't want to study that thing which will not come in exam? Because that will be also important from your CA point of view. Correct? And because of that reason, MBA are earning more than CA. It is, everyone says now, MBAs are earning more than CA. Why? Because of this. Because of this reason, they can't stand, means I will say MBA cannot stand in front of us. But if you study like this, you will get a degree, but you don't have any skills only. Better you be, but better I will say you do MBA, you will become thoda sa skillful and you will get some higher remuneration. But what I say, if you pass CA examination, it means everyone is expecting you are a chartered accountant. There is a lot of expectation from you, know. Lot of expectation from a chartered accountant in India. Once you say now you are a chartered accountant, respect will come from others party. It means you should have that much knowledge. Correct? Let us come to now the point. Leave it. What happened? Leave it. But now we should change. So what is the meaning of income? Income means what? In simple word, definition is very easy. I am not saying that you will not be able to understand the definition. Income is what? Increase in asset or decrease in liability. Increase in asset or decrease in liability with the corresponding increase in equity. Your equity will also increase. Means either profit will increase, so your equity will increase. So increase in asset or decrease in liability with a corresponding increase in equity. Correct? But in this, one transaction will fail. For example, just try to understand, you receive contribution from honor. What is the journal entry? Cash account, debit to capital. Increase in asset or not? But that is not an income. The increase in asset and your capital is equity. So this meaning is satisfied or not? But contribution from honor is not a income. Therefore, they have written other than contribution from equity holders. Other than contribution from equity holders. This is income. Okay. And reverse definition is what? Expense. Can you now say? It will be but decrease in asset or increase in liability with the corresponding decrease in what? Equity, your equity decrease. But here also one exception is there. When I am saying distribution to equity holder, what journal entry we have done? Equity dividend to cash. So there is decrease in asset, but that is not an expense. So equity dividend or dividend is not an expense. And therefore they have written other than what? Other than distribution to equity holders. Because I have written equity holder, I have not written equity shareholders. Equity is a wider term. So it can be any other equity holder also. Other than to equity, distribution to equity holder. This becomes the definition of income and expense. And because of that reason, dividend is not an expense. Because dividend is a distribution to what? Equity holder. And therefore dividend is not debited to PL account. And therefore dividend is debited to retained earning account. Correct? Now understood. So whenever I will say whether it will be transferred to PL apply definition of income and expense. If satisfy the definition of income and expense, then it is what? Either income or expense transfer to what? PL. Now you only say this difference, your pen was how much? 400. Now the price become 515. Increase in asset or not? Increase in asset. Other than this is not contribution from equity participant. This is not contribution from equity participant. So it is what? Income only. And therefore this income will be transferred to what? PL. This income will be transferred to PL. It will not be adjusted with retained earning. Understood? Have you understood? So if I am writing to PL, so you should ask me some why PL. Don't write only PL. Up to CA enter, whatever journal entry was given by faculty, you have accepted it. But now don't accept till you understand कि why PL, why retain earning. Abhi I have said retain earning account debit dividend payable. No one has asked so why retain earning, why not PL. You should change yourself. And now if you will not ask, I will also not inform you. If you are not changing, so I will also not change. Why I will change? I will be as the faculty like CA enter only. You need to change. Okay. So whenever I am given journal entry, if you have not understood, then ask me, so why retain earning, why PL, why this, why not this? Start asking question to yourself. Then only from accountant you will become chartered accountant. Objective is totally different. Once again I am asking whether I should teach from exam point of view or I will teach from CA point of view. I am asking second time. Then don't say after 5-6 days or 10 days, sir, you are teaching this much. Don't say. I am asking once again. If you say exam point of view, I will totally change myself. Or I will say I have one exam oriented batch also. Join that. Why you are in this regular batch? I will say that only, na. The benefit will come once you start discussing. You will understand the benefit when you start discussing with any chartered accountant. You will feel with my classes, you feel that you are actually a chartered accountant. You will start feeling after 10 days, 15 days when you will go to your office, the discussion will be there. Discussion will be there. Now, most of the time that chapter is completed, you will be at upper stage. That is my commitment. Okay. So now, can you see this become to gain on distribution of inventory, na? Transfer to PL. How much? 1,15,000. 1,15,000. And this gain will be transferred to PL account. This gain will be transferred to PL account. Understood? Have you understood the journal entry? Journal entry is very simple. I think you have done the journal entry by your own. My help was not required. I am here to only explain some small points. Okay? Yes, sir. Now let us read. Now let us read the entire concept. You will be able to understand. Non-applicability of Appendix A to Ind AS 10. It is not applicable to what? It is not applicable for accounting treatment in the books of shareholders who receive such distribution. This is applicable only in the books of entity who is distributing what? Non-cash asset. It is also not applicable to distribution of non-cash asset to entity which is ultimately controlled by same party before and after distribution. Have you understood? Have you understood this point? It is not applicable distribution of non-cash asset to the entity which is ultimately controlled by same party before and after distribution. Have you understood? Not understood? I have also not understood. Okay. And this point we'll understand when I will do what? Ind AS 103. Right now I will not explain. Because right now you will not be able to understand. Even though you might understand, I don't want to explain. Chalega? Abhi nahi. When we will do? Ind AS 103. Automatically I will only discuss. Don't worry about that. Okay? Then applicability, it applies to the following types of non-reciprocal transaction. Understood? Non-reciprocal transaction between entity owner, distribution of non-cash asset. This to example already I have taken. Then distribution that gives honor an option of non-cash asset or cash alternative. Means option has been given, you want cash, then take cash. You want non-cash asset, then take non-cash asset. Option has been given, but distribution of cash, whether applicable, distribution of cash, where this appendix is applicable, no. Distribution of cash is not applicable. Understood? So I will take one example to explain this also. I have already taken one example for this. Second point, I have not taken example. I will take one example. Yes, sir. The measurement of dividend payable. Entity shall measure dividend payable to its owner at fair value of asset to be distributed. That only we have done. At fair value, na? Are bolna rahe? That only we have done. If the entity gives its owner at choice, इसको बाद में करते this point. Okay. Then at the end of each reporting period and at the end of at the date of settlement, we have done reassessment. At the end of each reporting period and on the date of settlement, we have done reassessment or not. The entities shall review and adjust the carrying amount of dividend payable with any changes in the fair value of asset to be distributed. That only we have done. Chalega. When the entities settle the dividend payable, it shall recognize the difference, if any, between the carrying amount of asset distributed and the carrying amount dividend payable in what? PL. This is very, very important for MCQs, multiple choice question. In PL, not written earning. In PL means statement of PL. Written earning means in written earning directly in balance sheet from written earning will decrease. Got this point? Have you understood? Yes, sir. Accounting treatment. On the date of proposal or announcement of such distribution, no entry, no obligation. On the date of declaration and approval of such dividend, retain earning to dividend payable with the fair value of non-cash asset held for distribution. Correct? On reporting date before distribution, dividend payable will be reassessed with any changes in the fair value of non-cash asset held for distribution. On the date of distribution, dividend payable account debit to non-cash asset, any difference will be recognized in PL as gain or loss on distribution. That only we have done. Correct? Chalega. Now what happened? From this point, one MCQ was given, one multiple choice question was given in ICI Board of Studies portal. Correct? Let me take that MCQ only. I have already said once the chapter will be completed, you should go to what? Chapter wise MCQs. Bolna rahi? I have already said na. Have you completed the MCQs of India's 10, India's 37? That is your duty. Okay. This MCQs I will discuss wastage of time. It is quite possible only 1% chance that you have not understood the MCQs by your own. Because solution is given, you will be able to understand even though you are doing some mistakes. Okay. So that you do by your own whenever you have time. Sorry, but I have opened. I need to open what MCQs na. So this all MCQs soft copy has been already uploaded in the app. You can download from there. Already uploaded. Have you seen that? Bolna rahe. You don't have time only to open. Correct na? Let me take that MCQs. Yeah, this was the MCQs. Question number 8. Moon Limited having issued share capital of 15 lakh shares decided to offer two options for dividend per share. Option number 1, 10 bottle of what? Perfume, huh? 10 bottle of perfume. What you are thinking? 10 bottle of perfume, fair market value per bottle is 75. Option number 2, dividend payment of 700. Either you take 10 bottle worth rupees 75 means 750 or take cash worth rupees 700. The probability of shareholders selecting non-cash in relation to cash option is estimated 60:40. Means right now we are estimating that 60% of shareholders will take non-cash, 40% will take what? Cash. Calculate the amount at which dividend shall be initially recognized. So initial recognition will be done at what amount? Later we found the date of settlement if the fair market value of bottle is 90. Now the fair market value of bottle has been changed to 90, and accordingly the ratio for non-cash to cash become 80:20. Means actually now 80% are for non-cash and 20% are for cash. Then how much the difference shall be debited to the equity? Debited to equity means retained earning. Retained earning. So first initially what amount? बताओ. Total number of shares 15 lakh into how much percentage? बताओ. Non cash 60%. Correct. How many bottle? 10. What is the price? 75. What amount is coming? Hmm? 67.5 crore. 67.5 crore. 67.5 crore. Which you are saying 67 crore 50 lakh na? Okay sir. चलेगा. Then 15 lakh multiplied by what? 40%. For this how much cash? 700. How much it is coming? $42 lakh. What is the total? $109. Correct. Which option is correct? 1, 2, 3, 4. 4. 3. Can I say only this option has this amount? So this is only correct. Means in exam don't calculate what? Other point. But suppose this option has been given in 2 of the option, then you need to do other also. In class to will do. Then now on settlement date, what actually happened? Actual 15 lakh multiplied by 80% into 10. Now what is the fair value? 90. How much? 108. Oh, I understood. Okay. Then 15 lakh multiplied by 20% into what? 700. 21 crore. Total 1 crore 30 lakhs. 1 crore 30 lakhs. This is 130 crore. It is 130 crore na? $129 the lakh. 129 what? 129 crore. What is the difference? Difference will be transfer retained earning. Changes in the fair reassessment we have done. Difference is what? 19 lakh 50,000. That's 19 crore. 19 crore 50 lakh. What is the answer? 90 crore 50 lakh. Option number 3 is correct. This type of questions. Now, this question has been given in ICA Board of Studies portal. Till now not asked in exam. If the same questions comes in exam and if you will not do it now, it is whose mistake? Your mistake, not my mistake. Correct? Understood? But okay, super easy or not? Even though you have forgotten, apply your common sense, do it. I think you can do it by your own. Correct? So right now, don't write anything because you don't have the question. You have understood? Just write down here. Here, write down. Refer question number 8 of chapter wise MCQs. Now you can refer and you can practice by your own. Just write down here. In India, Saaransh book only. Refer question number 8 of chapter wise MCQs. Okay, sir. Done. Chapter is over from my point of view. All questions homework. Now from this chapter you can see I have not taken any questions from the book. Why I have not taken? Because I know I have done multiple examples in class only. Multiple examples I have taken class. But normally this type of question they ask. So I am giving you some questions which you must do 25, 24. Normally they are asking this type of questions in exam. Do it by your own. All questions you can do. Okay, sir? Okay. There is one point which I have left in the last class. I said that I will explain this point number F. Examples of adjusting event. You remember? The determination after reporting period of the cost of the asset purchase means what they want to say. Suppose this is the reporting date and this is the date of approval. Means you purchase the asset, but till now you don't know the cost price of that particular asset due to some reason. Means already the contract has been done, but the purchase price is not finalized, or there are some costs which is not yet known to you, and due to this event, it become adjusting event. So if you know determination after reporting period, the cost price of asset purchase, this become what? An adjusting event. This become an adjusting event. Okay. Similarly, the proceed from the asset sold. If you have sold some asset and you determine the sale proceed of asset due to some event which occur after reporting date but before approval of financial statement, that also require adjustment. Understood? Yes, sir. Yes, sir. Done. Chapter over. Chapter over. We'll take a break. After break, we'll start a new chapter. We'll start a good chapter, India 16. India 16, property, plant and equipment. Okay, sir? Now, can we start once again, everyone? Okay. So now we'll do India 16 property, plant and equipment. One of the very important Indias. Why it is important? Because if you understand this particular Indias, other Indias related to asset will become very simple. For example, India's 38 intangible asset will become simple because India's 38 is more or less similar to what India 16. India's 38 means intangible asset. Then we'll do India's 40 investable property. That is also, I will say, not exactly same, but similar to what India 16. So I will take more time under India 16 and less time under India's 38 and India's 40. Correct? And also important from examination point of view. Correct. Now, for this we have AS 10, accounting standard 10. Accounting standard 10 and India 16 is almost same. Means if you have done AS 10 in CA Inter perfectly, so there is no need to study India 16. It is exactly same. Why it is exactly same? Because AS 10 is a copy paste of IAS 16. And India 10, India 16 is nothing but what? IAS 16. There is only one difference. There is only one difference, that too because of presentation requirement. Correct? So let us start with the definition of property, plant and equipment. When I say property, what does property means? Batao. When I say property, property means what? Bolo. Property means what? Property means land or building, or it is land and building. Property means this only. It is not beyond this. The land or building, or land and building, or any part of building also. It can be any portion of building. Correct? Then what do you mean by plant? Plant means what? Any tangible item which is required to produce any item. Means if you use any tangible item to produce any item, that become plant. For example, we say trees are plant. Mango tree. Mango tree is also what? Plant only. Now we call it plant. Why? Because it produces fruits, but that is living plant. There are some artificial non-living plant also. Plant, factory plant. They also produce inventories. So that is plant. Apart from that, whatever is left means which produce, that become plant. Apart from that, any item left, any residual PP will be equipment. It can be office equipment, it can be electrical equipment, it can be any other equipment. So for example, if I say laptop, etc., benches, for example, here it is furniture, fixture, etc., all will come in equipment. Correct? So the topic came property, plant and equipment. Name came from there, property, plant and equipment. Now from CA Inter, one thing to that now there is no term known as fixed asset. That was a bakwas name, already deleted. From AS only deleted. Correct? So what do you mean by property, plant, equipment? Property, plant, equipment are tangible item. Are tangible item. But can you say all tangible item are not PP? Can you give me some example of tangible item which is not PP? Inventory is the best example. Inventory are not PP. Correct? So all tangible items are not PP. So sir, how can we understand this tangible item is PP? They have given two conditions. If both the conditions satisfied, then it become what? PP. So which are held for? First condition is what? Which are held for use in production of goods or for supply of goods or services. Means any tangible item which is used for, which are held for use in production of goods. For example, plant, factory, building, etc. Or which are held for supply of goods and services. Right now I am supplying services to you. So I am using many equipment, all will become property, plant, equipment. This camera, this laptop, this PC, this projector, these benches, all are what? PP only. or for rental to other. If you have given some tangible item of rent, that will be also property, plant and equipment. And for administrative purposes, it is quite possible. Just try to understand. Right now we are in classroom. In classroom I am supplying services, but there is one admin office also. In that admin office, neither I am doing any production, nor I am supplying any goods or services. So that admin office, whatever tangible item I have, that is also what? My property, plant and equipment. Correct. So which I use for admin purpose, correct. So which are held for use in production of goods or supply for goods or services or for rental to other or for admin purpose, and which are expected to be used for more than one period. So of course, can I say these are long-term assets? These are long-term assets which are expected to be used for more than one accounting period. Means, can I say if you purchase any asset, any tangible item which you are expecting that you will use only for 2 months, 3 months, then that will not be the definition of what? Property, plant and equipment. That should be charged to PL as an expense irrespective of amount. Because that will not be the definition of PP. Have you understood this point? Now this expectation on which date? He expected to be used for more than one period. Expectation on initial recognition. Means actual may be different. Means initially you purchase one tangible item on the expectation that you will use it for 5 years. But after 2 months something happened, you will discard it. Then also it will meet the definition of what? PP. So expectation on initial recognition. Correct. Now the definition is very simple. I think nothing to discuss more. But there are 3 clarifications regarding this. First clarification is regarding admin purpose. Just try to understand. If you look into definition, they have given only 4 purpose. One is production purpose, one is supply purpose, one is rental purpose, one is admin purpose. But there may be some other purpose also. For example, I may be using some tangible item in my research and development activities, or for accounting purpose, or for selling or distribution purpose. Correct. Now, for example, I am using one vehicle for promotional purpose. That is not for admin purpose, that is for marketing purpose. So whether it will meet the definition of PP or not. So one clarification has been given under India 16 that admin purpose is a wider term. It will include all other business purpose which are not given here. So it will include selling and distribution purpose, research and development activities, etc., etc., etc. So that clarification has been given. Understood? So what they have given? Admin purpose has been used in a wider sense to include all business purpose. Thus, PP include asset used for selling and distribution, finance and accounting, research and development, etc. Correct? Correct. Second clarification came from rental to others. Now, till now you have not done investment property. We will do investment property after India 16 only. So, what is the meaning of investment property? Any property which are held for earning rental income. Any property which are held for earning rental income. So one doubt will come, any property which is held for rental to other is what? PP or investment property. So one clarification has been given. Any property which meets the definition of investment property will not be covered under India 16. Will be covered where? Will be covered where? India's party. That clarification has been given. Understood? So any property means what? Land, building and land and building. Correct? Yes, sir. So investment properties are covered under India's 40. India's 40 means, to simplify it, so can I say in this way? When I am saying tangible items so it can be plant and equipment, it can be property, Yes or no? If this plant and equipment is held for sale in OCB, OCB means what? That an ordinary course of business. OCB means what? Ordinary course of business. You write them full. Ordinary course of business. So held for sale in OCB. Till now we have not done the inventory definition. Inventory means any asset which are held for sale in OCB. Then can this plant and equipment will become what? Inventory. Then it will become inventory now. Then it will become inventory. Correct. And if this plant and equipment is held for point number A, production. Point number B, supply. Point number C, admin purpose. Are you able to understand? Then it will meet the definition of PP, property, plant and equipment. Then Ind AS 16 will be applicable. And if this plant and equipment is held for rent to others, then this is what? Then there also it is PP. And Ind AS 16 will be applicable. Understood? Are you able to understand? Bolo. You have understood. Now, but for property, I am writing यहाँ पर for property. Can you say for property? So as a different it will come. Property held for sale in OCB. Understood what I have done? I have done copy paste, but you can't do. Huh? Property held for sale in OCB. Inventory Ind AS 2. Held for production, supply or admin purpose. PP Ind AS 16. But held for rent to other, then it will become what? Then it will become IP. IP means what? Investment property. And then what will be covered? Ind AS 40 will be applicable. Ind AS 40, because it is only for property, not for plant and equipment. Plant and equipment is given on rent for earning rental income, it will be property, plant and equipment. But property given rent for earning rental income, then it is what? Investment property, correct? So held for rental to other, for earning what? For earning rental income. So the detailed discussion we'll do not now. When I will come to what Ind AS 40, there are some more point to explain, but not now. Slowly, I will increase the concept. Okay, not immediately. Otherwise, a lot of confusion will come. This much you have understood. And for detail, refer what? Ind AS 40. Means again I will explain this particular point under Ind AS 40. Understood? So this exception is only for property, not for plant and equipment. Are you able to understand? Yes, sir. This you have understood. So now this point number 2 is clear. Point number 2 is clear. Now point number 3 is for treatment of spare part standby equipment and servicing equipment. Normally, what are these? Spare part means what? Small parts which are used in any property, plant and equipment. For example, nut, bolt, etc. So normally, suppose I purchase one projector, and now this projector require maintenance after every 15 days. So for this purpose, what I do, I purchase this small spare part and keep it with me, because every 15 days I will not go to the market and purchase it now. So it means I have already purchased spare part which will be used during the repair and maintenance of projector, etc. Now, what is standby equipment? Standby equipment means which will be used when the principal equipment is not used. For example, right now we have AC in the classroom and we have ceiling fan also. Normally we Indian use both. But why we put ceiling fan? If AC is not working, then use what fan? We Indian will use both now. Correct? Yes or no? Are you able to understand? If you go to foreign countries now, there is no concept of fan. There is only what? AC. And we Indian will not be able to sleep there, because we want what? Fan. That sound is required now. We are habituated to that. Correct now. So it happens with me also. When I went to the foreign country for the first time, I said, where is the fan? I want fan. Yes or no? So leave Indians. But can you say, if suppose with AC we are also installing fan, the fan become what? Standby equipment. This is very simple example I have given. Better example if I give in this way. In the big manufacturing companies, they will have power plant to generate electricity. Now that power plant require maintenance for 15-20 days. So if that require maintenance for 15-20 days, so whether that during that particular period there will be no production, yes. So they will also purchase small generator. So whenever that power plant will require repair and maintenance, then this generator become the standby equipment that will be used instead of what? The power plant. So that generator will not be used throughout the year. It is quite possible not used in that year. Understood? Then servicing equipment. These are the small tools which are required for servicing the equipment. It may be small, it may be heavy also. If you are using any bike, you will have one servicing kit in that bike. You have seen servicing kit. We never use that, but servicing kit will be given. That is nothing but servicing tools for servicing that plant and means that bike. Correct? So that becomes servicing equipment. So quite possible that tools you have never used in your entire life. Now the doubt will come, if any entity has purchased spare part, standby equipment or servicing equipment, whether it will meet a definition of PP, means whether it is a PP or it is not a PP. So one simple clarification has been given. If it meets a definition of PP, then apply Ind AS 16. Means apply a definition. And if it does not meet a definition of PP, then it become inventory. And apply Ind AS 2. Simple. So if it meets the definition of PP, then apply Ind AS 16. If it does not meet the definition of PP, then it will become inventory and apply Ind AS 2. Can you say, if you want to apply definition, so in this definition, in these two conditions, first condition will be always satisfied for this spare part, standby equipment and servicing equipment. Only second condition may not be satisfied. It is quite possible it may be used within that period, means not for more than one period. So small spare part might not meet the definition of PP. In that case, it will become what? Inventory. Understood? So you need to apply the definition, and mostly this point number B will not be satisfied. If point number B is not satisfied, it will become inventory, Ind AS 2, and it will be charged to PL as an expense once it is used. So once you have consumed this type of item, that will become expense charge to profit and loss account. Understood? Very important for interview question. This type of question they ask in interview and can be asked in multiple choice question. Multiple choice question. So if it meet a definition of PP, then recognize as PP, apply Ind AS 16. If it does not meet a definition of PP, then recognize it as inventory, apply Ind AS 2. Such inventory will be charged to PL as an expense when consumed. When consumed means when you have used it. Correct? Definition over. Definition over. So can you repeat with me? PP are tangible item held for production of goods or supply of goods or services or for rental to other or for admin purpose and which are expected to be used for more than one period. Definition is over. Now once definition is satisfied, what Ind AS 16 says that item is that tangible item must also meet recognition criteria. So if it meets recognition criteria, then only it can be recognized as PP, otherwise it will not be recognized as PP. So definition is also important, recognition criteria is also important. Then only you can recognize such item as what? PP in financial statement. What is the recognition criteria that we need to understand? So what they said, cost of an item of PP shall be recognized as an asset if and only two conditions are satisfied. If and only two conditions are satisfied. First condition, it is probable. Probable means what? Chances. Whenever I say probable, then chances are more than 50% that future economic benefit associated with the item will flow to the entity. Correct. And the cost of the item can be measured reliably. And cost of such item can be measured reliably. Correct. Tangible item. Can you see very simple recognition criteria? It is probable that future economic benefit will flow to the entity and the cost can be measured reliably. Can you say for tangible item, second condition will be always satisfied, we can easily identify the cost. Means if I am purchasing furniture, so I know what is the cost of that furniture. If I am constructing building, so I know what is the cost of that building. So for tangible items, second condition will be always satisfied. Only you need to cross check what first condition means. If it is probable that future economic benefit will flow, then recognize, otherwise do not recognize. And can I say, whenever you are purchasing any item for your business purpose, it will give benefit, then only you are purchasing. But sometimes what happens, due to some event, quite possible it is not providing future economic benefit. Let me give you my example only. What happened with me? I'm just giving my example. What happened with me? When I started recording my classes for the first time, that time I was not knowing how to record because we were traditional type of teacher. Means we used to stand in the class and we used to teach in the whiteboard. Yes or no? That time face-to-face classes were there, 300 students were sitting, a big whiteboard was there. I start from there dancing to there, from what, left to right, left to right, left to right. Maja aata. That was एक अलग charisma. Understood? Now to sitting and teaching, because I need to record the class also. Are you able to understand what I am saying? So when I decided to record my classes for the first time, that time I was not knowing how to record it. Correct? But I know one camera is required. Correct? So I went to what? One of the vendors. I said I want to record my classes. I want one camera. He said, what is the budget? I said, budget? I don't know what is the budget. You only say me to. He has told me camera from the range 20,000 to 3 lakh. And that time my pocket size was also not so big. So why to invest this much? I was not knowing. So I said I just inform him that I want to record my classes. This is the function. Whatever reasonable budget you give me that camera. So he have shown me one camera of, I will say, 30,000 rupees, and I have taken one demo also there only. He started recording me. I said, hello everyone, good morning, how are you? And output was coming good only. I said, okay, give me this classes, give me this camera for my classes, and I purchased, the invoice was made and bill was paid. Then what happened? I came to my classes, that time face to face classes. I fixed the camera. That time it was a big room, 300 classes, and the camera was at the end of what? My class, and I started recording. I started recording. Understood? Then what I found that the output only video is coming, audio is not coming. Understood what happened? And the picture quality was also not good. So what I said, what actually happened? I again went to what? The vendor. I said, array, audio is not coming and video, the quality is not good. Whatever you have taken the output, in that audio was also good, video was also good. He asked me, sir, where you have put this camera? I said, distance is this much. Then no. This camera is only for short distance. It should be it should be like this. Okay, how it is possible in face-to-face classes? But you have not informed us. I said, okay, first condition not satisfied. First condition not satisfied. Not satisfied now. No, it is of no use. No future economic benefit. First condition not satisfied. So quite possible you have purchased something, but it is quite possible after purchase you identify that it is not probable that future economic benefit will flow to the entity, then it will not be recognized as PP. Example you understood? Example you understood. But normally I will say it is a very rare situation. Rare situation. Normally whatever you have purchased, it is probable that future economic benefit will flow to the entity. But can I say as a chartered accountant, you should always find out whether it is probable or not probable. Correct? Understood is fine means, can I conclude in this way? Whenever there is a tangible item, whenever you have purchased one tangible item, first we need to apply definition criteria as per India 16. Satisfied, not satisfied. If not satisfied means it can be some other asset, it can be inventory, it can be investment property. Correct now. So not satisfied, I am writing apply respective Ind AS. That we don't know right now. Na? Are you able to understand what I am saying? The tangible item may meet the definition of inventory, may meet the definition of investment property, may meet the definition of biological asset coming soon in your life. Okay. But Ind AS 16 definition satisfied. Then you will apply what? Recognition criteria. Understood? If satisfied, then recognize as what? As PP and apply what? Apply Ind AS 16. But if not satisfied, then there can be two situations. Correct? Either it may be held for sale, correct? Or no future economic benefit expected, Now you are expecting no future economic benefit. Quite possible, na? If no future economic benefit, then it will be recognized as an expense immediately. Recognized as an expense immediately. Correct? But if it is held for sale, then apply Ind AS 105 coming soon. Apply Ind AS 105 coming soon in your life. Okay, sir? So Ind AS 105 is for non-current asset classified as held for sale. I hope thoda you have understood with this. So first apply definition, then apply recognition, then recognize PP and apply Ind AS 16. Means, can I say once recognition criteria is satisfied, then we start initial and subsequent recognition. First we'll do initial recognition. Initial recognition means what? For the first time you are recognizing it, so at what price it should be recognized. Then subsequent recognition means at each reporting date, what should be the measurement principle. Initial and subsequent recognition. So let us start with what? Initial recognition. Initial recognition. Correct. Now, measurement at initial recognition. Measurement at initial recognition. So when you are doing initial recognition, so you want measurement at initial recognition, so always at cost price. Initial recognition will be always done at cost price. So it is at cost price, which is nothing but cash price equivalent. Now, so what do you mean by cash price equivalent? Cash price equivalent. Let me explain you something. Just try to understand. Whenever we purchase any asset, either it will be cash purchase or credit purchase. Cash purchase, credit purchase. Now let us assume the cash purchase has been done at rupees 1000. At rupees 1000. In this, no doubt, cost price will be equal to the amount of cash paid. In this, no doubt. Now, so what journal entry you will do? PP, account debit to cash. In this, no doubt, na? So this 1000 will become the cost price. 1000 will become the cost price. No doubt. Now, credit, there can be two situations. In credit, there can be two situations. Correct? First, whenever there is a credit, so some credit period will be allowed. It means there will be some credit period. Correct? So if the credit purchase is done at normal credit period, at normal credit period. Normal credit period means what? A credit period which is given by all vendor, that is normal credit period, which is acceptable in the market. Which is acceptable in the market. Correct. Now, I just want to ask you one question. If suppose you are vendor, so you are doing cash sales at rupees 1000, and you are giving a normal credit period to some of the customer. Normal credit period of 30 days. Okay, within 30 days, the customer can pay. Whenever you are giving normal credit period of 30 days, will you sell at rupees 1000 or more than 1000? 1000 or more than 1000? 1000 or more than 1000? More than 1000. If you say more than 1000, customer will never come. Customer will never come to you. Why you are giving credit to increase your sales? Just think about this now. Otherwise, do cash sales only to increase the turnover. To increase the turnover, because you know that the customer will be attracted with credit. So you are giving some normal credit period, because at that credit period you have less risk of default. Understood? So if you are charging more than 1,000, the customer will go to some other vendor now. Are you able to understand what I am saying? Therefore, normally at this point also the sale price means from buyer point of view it become purchase price. It will be rupees 1,000. So here also it will be rupees 1,000. Correct? We call it purchase price. We call it, this is purchase price at normal credit period. We call it what? Purchase price at normal credit terms. Normal credit terms means this price and this price will be always same in the market. So here also what journal entry will do? Journal entry will PP account debit to what? Payable. PP account debit to payable, rupees 1,000, rupees 1,000. Correct. But sometime what happens? The sale has been done which is more than what normal credit period. Means you have given credit period which exceed what normal credit period. Quite possible. In this case, means second credit period exceed what? Exceed normal credit period. For example, suppose if the credit period is 30 days, so you have given a credit period of 1 year. Quite possible. Now, in this case, you only say the seller will charge 1,000 or more than 1,000? More than 1,000. More than 1,000. Understood. And can you say you will try to add interest at market terms? Suppose market rate of interest, let us assume market rate of interest is equal to 10%. So how much you will charge? Then your sale price should be how much? Then your sale price should be how much? 1,000 plus 100. That is 1,100. Yes or no? Are you able to understand? We normally just try to understand from vendor point of view, from seller point of view. From seller point of view. Normally they will not say his sale price 1,000 plus interest. They will say sale price, you want credit period of 1 year, now we'll give you. Then, but they will not say that you need to pay interest, 1,000 is sale price, 100 is interest, rate of interest. This much discussion will never be there. They will say 1,100. You want to purchase? They will say okay. Because you also need what? The buyer also need credit, and they will also have a knowledge about product, and they will be also willing to pay the interest. But the negotiation will be based on sale price. So sale price is what? 1,100. Means in the invoice, what they will mention? They will mention sale of goods at rupees what? 1,100, and this become the invoice. Are you able to understand what I am saying? Correct. So this what? This is a situation when what? When credit period exceed normal credit period. In that case, the invoice price is 1,100. Now you only say the cost price should be what? 1,000 ki 1,100. Cost price should be 1,000 or 1,100. Bolo. I'm asking you. India 16. Same thing is given under AS 10. But here in terms of whether this was discussed. Understood the level? Level you are understanding? It might have discussed, but they have not done so much explanation. I am giving from the background. Bata, what? At rupees 1000 or 1100, means cost price will be 1000, 1100. 1000, not 1100 now. Because 100 is interest element. And we do accounting based on substance, not based on legal document. Contract is a legal document. Don't give importance to contract. Don't give importance to legal document. We apply substance. So here the amount paid for the purchase of the asset is only 1000. Whatever you have paid extra, that is 100, even though it is not mentioned in the invoice. Even though it was not mentioned in the invoice, but we do accounting based on substance, not based on form. Got this point? What journal entry will do? The journal entry what? The first journal entry. Suppose you purchase at 1/4, your journal entry PP, account debit, how much? 1000. And payable how much? Payable how much? Are payable also 1000 only. How can you recognize interest expense at the beginning? Payable is also 1000. Right now payable is what? 1000. Correct? Means you can see same journal entry now. Same journal entry. But here interest will come. So here at 31st March year end, we'll pass one more journal entry. Interest expense, account debit to what? Payable. Interest expense, account debit to payable. How much? 100. 100. And this interest expense will be charged to profit and loss account. And now payable become 1100 and that will be paid. So one more journal entry we can do, payable account debit to cash or bank. Have you understood this particular point? Means in all situations, cost price is equal to what? 1000. In all situations, the cost price is equal to 1000 only. Have you understood this entire discussion? Now you will be able to understand what I am discussing. What do you mean by cash price equivalent? What they are saying, when the payment is not deferred beyond normal credit period. Means this is this two situation, either this or this. Either this or this now. When the payment is not deferred beyond normal credit period. So here cost price will be equal to cash and cash equivalent paid. Means whatever consideration you are paying, that become cost price. Whatever consideration you are paying, that become cost price. The cost is the amount of cash and cash equivalent paid of fair value of consideration given up. Whatever consideration you are paying, that become what? Cost price. But when the payment is deferred beyond normal credit period, then can you say cost price will be equal to, can you say in this way, purchase price at normal credit terms? Purchase price at normal credit term, that was 1000 only. Or can I say in this way, present value of all future payment? Can I say present value of 1100 at 10% will be 1000 only. At one present value of 1100 at 10% will be 1000 only. So can I say in this way that cost price will be equal to present value of all future payment, that is nothing but purchase price at normal credit terms. Purchase price at normal credit terms. Understood? Have you understood this point? Have you understood this point? Correct. Now, purchase price at normal credit terms. This point have you understood? Just write down purchase price at normal credit terms means what? Purchase price at normal credit terms means invoice price minus trade discount, if any, plus any non-refundable taxes. Non-refundable tax. You know about GST? GST credit might be available, might not be available. If the import credit is available, then it becomes refundable. Then don't add. but input credit is not available, then is non-refundable, then add it. So this become purchase price at normal credit terms. The purchase price at normal credit terms means what? Invoice price minus trade discount plus non-refundable duties and taxes. Correct? Understood. The cost price will be equal to purchase price at normal credit terms or present value of all future payment. And the difference between what? Future payment and present value will be interest. That interest will be recognized as an expense over the period of credit, unless it is covered under Ind AS 23. Unless it is covered under Ind AS 23. Ind AS 23 is nothing but AS 16. AS 16 was what? Borrowing cost. So borrowing cost AS 16, if you remember, it can be capitalized if it is for qualifying asset. If you remember Tora. So what they want to say, if it is covered under Ind AS 23 and all the conditions satisfied, then such interest expense can be capitalized. Can be capitalized to the cost price of the asset. Are you able to follow me? Are you able to follow me? Correct. Yes, sir. So what they are saying, interest will be equal to future payment minus present value of all future payment. Interest will be recognized as an expense over the period of credit unless it is covered under Ind AS 23. Coming soon. Ind AS 23 is coming soon. Correct. If question is silent, always charge to what? If question is silent, then always PL. Nothing has been given, always assume Ind AS 23 is not applicable, charge to PL. Correct. Have you understood this part? Let me take one example. An entity acquired a plant for rupees 20 lakh on 2-year interest-free credit. 2-year interest-free credit. So when they say 2-year interest-free credit, it is a contract. But will you give importance to contract? 2-year, can I say it is beyond one normal credit period? Of course, this 20 lakh will be inclusive of what? Interest. Because nothing is free in India. Anything is free in India? No. So can you say, just try to understand what they want to say. Even though it is mentioned in the contract interest free, but actually it is not interest free. Whatever given the contract, that is not at all important. You do accounting based on substance of a form. Correct. An appropriate discount rate is 10%. And can you say, if they have given discount rate, it means it is beyond normal credit period. Calculate the cost price of the plant. So what is the cost price of the plant? Apply. Can you give me the discounting factor for 2 years at a rate of 10%? 8264. So 0.8264, it becomes 16,52,893. Then you will add first year interest. The first year interest will be 1,65,289. Then this will be amount payable at year end 1. Then always second year calculate balancing figure. So if you find out difference between 18 lakh, 18,182 and 20 lakh, so this will be the interest expense of second year. Understood? Simple. This type you can do. Means what will be journal entry? Batao. If I ask you journal entry for this example, suppose the first date is 1/4, year 1. So what journal entry? PP account debit to payable. How much? 20 lakh not. 16 lakh 52,893. Try to understand whatever I am asking. Correct. Then on 31st March, interest expense, account debit to what? Payable. How much? 1,65,289. 1,65,289. Then can you say on this 31st March only, on the same 31st March, this is year 1. Right on year 1. Depreciation will be also there. So depreciation, account debit Can I say to accumulated depreciation? You know this journal entry. There are two journal entry, depreciation to PP and depreciation to accumulated depreciation. But this is the better journal entry. You write on this, I will explain someday about this journal entry. Depreciation to accumulated depreciation. The depreciation will be on 20 lakh or on 16 lakh 50,893. Depreciation you will calculate on 20 lakh or on 16 lakh 52,893. Bolo, on what? 20 or 16? 16 because this is only cost price now. This is the cost price. But I have not given what? Useful life. So we can't calculate it. Correct now. Let us, if you want to write down, assuming, suppose it is given or we have assumed for this particular solution, useful life is 10 years. So it will be 16 lakh 52,893 divided by 10. So it become, it becomes same na. Chalo useful life kar do 5. Otherwise you say sir both are same. Useful life is 5, huh? 5. Now what is the depreciation coming? How much? How much? Correct? Then second year journal entry you can repeat. You can repeat. Okay, sir. Are you able to understand? Understood? The first part you have understood. There is one good question given for this. Let us do that question. Question number 1. Can we come to question number 1? What is given? On 1st April 2001, an item of property is offered for sale at 10 million. 10 million means 100 lakh. With payment terms being 3 equal installment of 33 lakh 33,333 over a 2-year period. Payment are made on 1st April 2001, 31st March 2002 and 31st March 2003. Means deferred payment. If the question is silent, always it will be more than normal credit period. If nothing has been given, it means it is beyond what? Normal credit period. 2 year, not 2 year will be always beyond one normal credit period. The property developer is offering a discount of 5%, that is 0.5 million, if payment is made in full at the time of completion of sale. Means can I say, if you pay entire amount today, you will be given a discount of 5. You will be given a discount of 5%. It means purchase price at normal credit term is how much? 95 lakh. And I have already said this become trade discount. This become trade discount now. So any discount given on the date of trade, any discount given on date of trade is trade discount. Are you able to understand what I am saying? It means purchase price at normal credit term is 95 lakh. Correct? Then, so implicit interest rate is 5.36% per annum. So how the property will be recorded in accordance with Ind AS 16? Now they have given discount rate. So we can calculate what? Present value. Present value calculate. If I am doing question number 1. Question number 1. Correct. First we'll do point number A. Calculation of what? Cost price of PP. Random year. Means you can have date. Date na. Then payment how much? Then discounting factor at what rate? 5.36% and present value. The first date is 1/4/2000. 1, 1/4/2001, then 31st March 2002, then 31st March 2003. It means, can I say it become Y0? It is Y1, it is Y2. Correct. The payment is what? 33 lakh, 33,333, 33 lakh, 33,333, 33 lakh, 33,333. And discounting factor, can you give me? Give me 3 decimal. How much? First is 0.949, correct? Is it correct? Is it correct? No, it is not correct. This is 1. Presence of mind, one simple mistake, 6-month gap. Okay, understood? So be careful. Y01 na? This though you know, discounting you know, but sometimes whatever, whenever we are not concentrating, this type of mistake will happen. Okay. Then 0.949, then 0.901. Can you give me the present value total? Give me total. See, 94 lakh 99,999. So 1 rupees difference, can I say approximately 95 lakh? So better you write down what? 95 lakh, because it will be always equal to what? Purchase price at normal rate terms. So don't take that 1 rupees or 2 rupees difference. Understood? It should be equal to what? Purchase price at normal rate terms. So this only become the cost price. Means there was no need to calculate this. If the purchase price at normal rate terms given, but then also I will say give this as a working note. Means from my point of view, exam, either they will give you purchase price at normal rate terms or they will give you discounting rate. But purchase price at normal rate terms and this present value will be always same or not? Will be always same. Then you can pass journal entry now. Now we can pass journal entry now. Journal entry, can I give you, show you from solution? Come to the solution. First journal entry is what? PP account debit. How much? 95 lakh. Immediately how much paid? 33 lakh, 33,333. The difference is payable. Difference is payable. Now on this amount, on 31st March 2002, we'll calculate interest at what rate? 5.36%. So how much 5.36% coming? Check karo whether it is coming same or not. It will come same only. Then what is, how much cash paid? 33 lakh, 33,333, and the difference will be adjusted in what? The payable amount, payable will decrease. Then again the same journal entry, but now this you calculate as a balancing figure. As a balancing figure. Understood? Chalega. Okay, sir. Normally I will suggest that whenever this type of questions come now, to do one more working note. This is my suggestion. And normally ICI is also doing this working note. They are doing calculation of interest expense. I will not record directly, also you can do it. But if suppose this question is of 8 marks, so I will suggest you do this as a working note. Otherwise they are deducting marks. Okay. So what will be their working note? You write down year, then you write down opening liability. OL means opening liability how much? Then because you are doing payment na. Then you recognize interest at 5.36%, then payment, and then closing liability. So year 1, what was the opening liability? Can you say opening liability will be 95 lakh minus this because this was paid initially. What was the opening liability? 60, how much? 61 lakh 66,000. 61 lakh 66,667. Then interest 3 lakh 30,000. 533. Then payment 33 lakh 33,333. What is the closing liability? What is the closing liability? Bolo. How much? 31 lakh 63,867. Now I'll come to year 2. 31 lakh 63,867. And payment will be what? 33 lakh 33,333. Correct now? And the closing liability will become nil. So what is the difference? This will become balancing figure. Can you give me the balancing figure? 1,69,466. And you can see same thing they have also calculated. 467 now. Coming 3, 6. Chalo. Okay now. It is coming 466 now. Chalo, 1 rupees difference coming. Okay, sir. Have you understood? Because they have taken here 4. I don't know why they have taken 4. Yeah, it should be 3 only na. Because that is a 1 rupees difference coming. But chalo, our is correct. Understood? This journal entry you can do. This become a basic question. Today we have done only a basic question, but good question. This question till now not asked. From my point of view, expected. Expected. Okay, sir. Understood. Today I will not teach you beyond this. Today this much only. Okay, sir. This much only. What I will suggest, complete India's 37, India's 10, all the questions. If the time permit, do the MCQs chapter wise. Okay, now. Understood? Thank you very much for today. We'll meet tomorrow. Till then, bye bye. Take care. Enjoy your remaining day. Bye bye.